It's that time of the week. Talk to our buddy, Zach Abraham, Chief Investment Officer, Bulwark Capital. He's a friend of the show. He is sponsored the show, and he's the freaking man. And it's been a few since we've talked, but I don't know if you're aware of this, but the jobs numbers got revised, and they fired people over there, and that wasn't a good look to start everything off.
No, no, it wasn't. I look, I found that whole situation really humorous. Um, because somebody asked me, they're like, "Do you agree or do you not agree with him firing that person?" And I went, "Well, look, there's obviously a shoot the messenger element to it because like
Yeah.
the BLS is a pretty big group of people, so it's not one person in there concocting data to try to make Trump look bad. That being said, it's really hard to come to the defense of anybody working at the BLS because the numbers have just been so bad for so long. Um, and some of it's their fault, some of it's not. Some of it's just the way that the economy has changed, especially in the last 15 years, and the way we collect and look at data really hasn't. And so
Explain to everybody how they get the data, because I don't think people realize. I think they think it's some magic thing, and it has to do with the employers filling stuff out, right?
yeah, there are several different things they're looking at. I mean, they've got several different data streams, but primarily you've got Fed governor banks at different regions around the world, right? So you've got a Fed bank in San Francisco, you've got a Fed bank in Dallas, you've got a Fed bank in Minneapolis, you got a Fed bank in New York, of course, and you have them. I think I think that you don't hold me to this, but I want to say there's like either 8 or 9 different Fed regions around the country. And those guys are collecting, those regional banks are collecting employment data from their area, right? They're looking at manufacturing, they're looking at construction, and then they're piping that data into the BLS, and then the BLS is composing the data. That's where they're getting the vast majority of their data. But when you start thinking about the role that immigration plays in society, when you look at how many of them are illegal and off the rolls, when you look at the rash of contracting that we've seen, where you've got substantially high paying jobs that have been contractors now, there's just so much that has changed in the economy. And the way that we're capturing that data hasn't. And so I think there's a lot of different reasons that have made that data so noisy, and it's always going to be noisy, because you're dealing with different parts of the country, independent business owners. I mean, it's going to be a noisy set of data anyway, and it's hard to get it right. But they really need to look in updating. I mean, yeah, you're seeing it through Doge, right? You see all of these really arcane, totally, worn out and no longer relevant things that they were doing, programs they were using. That incalcitrance and that aging has affected all parts of our government. And I think that looking at labor statistics and the way that we compute them and the way that we gather them, I think it's just as outdated as a lot of these other things.
Talking to Zach Abraham, Chief Investment Officer, Bull Capital. Tariffs, I mean, it's tariff palooza. Again, if you asked me what tariffs are on, I couldn't tell you because even if you put a 30%, 40, 50% on somebody, the fact is there's carve outs for this and carve outs for that. But there's no doubt that, manufacturing is struggling and you're seeing a slowdown. And I know that he would love everybody to make the iPhone here, but the reality is nobody wants to spend $2,500 on an iPhone and it would take 10 years to get everything ready. At some point in time, the fact is we are going to feel it. It's just when.
I think we're starting to. So my kind of pet theory right now is that if you looked at the economy as it sits today, if you did not have AI going on and the unbelievable amounts of capex that was dumping into the market, and if you did not have deficit spending ratcheting up another 500 billion this year, I think you'd probably be in recession right now. Okay, but that shouldn't panic anybody because we do have those other things going on, right? So do I think it's clear sailing? Not at all. Am I comfortable with the valuations that this market is sporting right now? Not at all. I don't know if you saw Apple this week, but this was, I keep saying some of these are all timers, but they just keep outdoing themselves. So Apple comes out, they have their great meeting with Trump, right? They
Did
come
you
out,
see Tim Cook? Did you see him? He
yeah.
came and gave him that gold thing like it was a tribute.
Oh my gosh, man.
That
I
was
know.
uncomfortable.
It was really uncomfortable. It also shows me, you and I are anything but Trump sycophants, and we've probably ticked off some listeners over that. Um, Look, I voted for the guy, and if the election were held again today, I'd vote for him again. Okay, but it doesn't mean that I have to sign off on everything he does. But that being said, I do think so many of those people that are on the natural left, and I shouldn't say that about Tim Cook. I don't know that, but I would bet if somebody wanted to bet me right now 10 grand whether Tim Cook voted for Trump or not, I'd take the bet in a second, right?
Yeah, absolutely.
And if I'm wrong, I'm wrong, but I'd take that bet in a second. But I don't think those people really understand him. I don't think you need to come pay homage. I don't think it hurts with him. I think his ego likes it,
Oh yeah.
but he likes deals. He wants to make deals, right? You don't have to. If you come make a solid deal with him, I don't think you need to come kiss the ring. I don't think it hurts. But I think it's funny. But the real announcement to me. So what did Apple announce? Apple announced that they're going to invest 100 billion in U.S. manufacturing, which will pressure their margins on their iPhones even more. That's what Apple announced.
Yeah.
Their stock went up 10%. For those, it went up 6.5, 7 yesterday on the news, and then moved up another 3% today. So you're up 9-10% move. Okay, that equates to 100% of their annual profit. So on a news announcement that meant they were going to have to spend 100 billion and margins on the iPhone were going to be compressed further, and this is their flagship product that is ceding market share to everybody.
Yeah.
Right? They announced a move that will pull 100 billion out of the coffers and pinch their profits even further, and the stock went up the equivalent of a whole year's worth of profit.
It makes no sense, man. I don't get what people are doing. And, I've been telling everybody, look, if it wasn't for the AI stocks, we'd be in a lot of trouble.
I agree with you.
And Palantir, by the way, Palantir, which of course is basically, they just came right in behind old Elon there, and they might as well be living there at this point in time, because if you want to invest in something that has a chance to go to 500 times earnings, this might be the thing.
It's already there, buddy. It's at 600 right now.
Yeah, it's insane.
Yeah, so I think you're trading at about 105 to 110 times revenue right now on that thing. To be fair, Palantir to me is in a category, and I've told this, you're not investing. No. And the reason why I'm not is not because I don't love the company. I think that they've got a brilliant platform. I think they got some great stuff. I know people that have used it. They are rock solid, right? I love the company. We've made a lot of money on the stock. We traded it a lot between $15 and $30 a share. Wish we'd hung on longer. But when you get a stock that's that expensive, when you're looking at a stock that's trading at $430 billion market cap and is doing $5.5 billion of revenue a year, I don't know what that is. I mean, when you own a stock like that, you have to be open to the idea that you wake up in the morning and one news announcement goes across the screen and that stock's down 50 or 60%. And people are like, it can't drop. Yes, it can, right? Because you're talking about $5.5 billion of revenue. Is it growing at an impressive rate? Yeah, 48%. But just sit down and say, okay, they're going to keep growing at 40 to 45% for the next 5 years. Mark that out. See where that gets you. I got a hint. Doesn't get you anywhere close to $420 billion. Do I love the company? Yes. Are the margins spectacular? Yes. Is the company hitting on all cylinders? Yes. Is the fact that one of the biggest things that is driving their revenue growth, their ability to save the government money, is that attractive? Heck yes.
Well, as long as they spy on us.
Well, right. I mean, that's the other thing. But at 105, 110 times revenue, to me, at that level of expense, you're not betting, you're gambling. And doesn't mean you can't win. When you're trading something that expensive, it even sounds, Chad, you know this, it even sounds crazy. I wish I could tell people how insane 100 times revenue is. I wish they really got that, right? Like, I remember coming out of the dot-com bubble, people looking back at 10 and 12 times revenue and going, what were we thinking?
Yeah.
What were we thinking? And now you're at 105 and Jim Cramer's saying it's undervalued.
And he's pushing a button. He's pushing a button to do it. Talking to Zach Abrams, Chief Investment Officer, Bulwark Capital. It's weird because I feel like people are nervous. At the same time, they're hopeful. It's a hard this economy itself is kind of a hard thing to gauge right now because I'm expecting at some point in time we're going to have a bit of a slowdown, a recession, because that's just a natural cyclical cycle that we go into. Rather get it over with now than later. But it's an interesting thing because I see consumer confidence is up a little bit, but then I look around and I'm thinking we haven't felt the tariffs. And one thing says that this is going great. The next thing is, hey, one thing goes wrong and we could see a kick in the grundle. I can't peg it, man.
Well, yeah, this gets back to our data discussion, right? Like you brought up consumer confidence. Consumer confidence used to really matter. Consumer confidence now, you can throw it out the window. All consumer confidence is the S&P 500. When
Yeah.
it's up, making all new time highs, you're going to get good consumer confidence. When it gets hit, you're going to see it drop. And it's just that simple. We track it all the time. We've quit paying attention to it. It's just become a proxy of the stock market. Here's the thing, people. In my opinion, in our opinion, at Bulwark, this is the way people need to think about things. If I owned a bunch of those tech stocks, I'd be really nervous and confused now. But we don't. We own some, but very few, and focusing on the ones that aren't outlandishly expensive. But what we do own is a bunch of things who are ridiculously undervalued, that these companies are hitting the ball out of the park, but nobody wants them because they're not in the right industry. They're
Yeah,
not
they're not
sexy
sexy.
enough.
They're not
They don't,
sexy.
yeah, they don't hear people talking about it on Wall Street bets. And, I mean, we continue to outperform the market by double digits this year and have a really good outperformance of it over the last 2 years. And those types of stocks are what's driving it. And I think we're halfway through the first inning on those kinds of stocks. The other one that we've talked about, and you're not going to hear anybody talk about this, China. Keep an eye
China.
out for China. Yeah, China. But you're seeing pretty much everything via economic data there, imports, all that kind of stuff is starting to pick up. They're dumping a massive amount of stimulus in there. But here's the tell to me, Chad. The tell to me has been, because everybody's like, oh, yeah, they're acknowledging that the stimulus is getting dumped into China, and yet nobody wants to own Chinese stocks. And that gets me excited because what have we seen for the last 12 or 15 years? Everywhere where stimulus starts getting injected, there's always a contingent in the market that's like, oh, no, it's not going to work this time. Guess what happens, right? Everybody eventually floods that market. Why? It's for the same reason when you were a kid at the summertime, you heard the ice cream truck coming and all the kids flew out of the door, right? It's too easy to win in an environment where a market's giving money, where government's giving money away. And then what we were watching was saying, okay, we need to know. I want to make sure China's not in so much trouble that this stimulus isn't going to help them. So we were really keeping an eye on Australia. If China is in fact reaccelerating economically, it is impossible not to see that mirrored in Australia's data because they provide so much of their raw material. Australia is going like this.
Yeah.
China's going like this. What is everybody talking about? They're talking about US stocks trading at 105 times valuation. They're not talking about Alibaba trading at 16. They're not talking about Tencent at 18. They're not talking about BYD. They're not talking about Xiaomi. They're not talking about Tencent Music. They're not talking about all JD.com. There's so many of these plays over there that if you like these Meg 7 stocks, they're Asia's version of it. People are like saying, Zach, you should go up there and fill up there on Chinese equities. No, that's not what I'm saying. You've heard me talk about it with commodities. Go look at the gold miners. New all-time highs on GDX today. You've got on several different metrics, pretty much all of those gold mining indices are at all-time highs or very close to breaking out. The margin story that we've seen in those things is incredible. Silver, basically look at all of the areas. I think I told you about that Latin American just hit a new all-time high on that one. I think that thing's up 20% on the year. An airline company. We picked up an airline company. Check this out. They just announced earnings. We bought it at 6 times earnings. It was paying us a 7.5%, 8% dividend when we picked it up. Okay, they just announced their quarter. I think their revenues, I think they were up on the year like a 13% run rate on revenue. And they posted almost 18% margins or 3% better than Apple, right? An airline company. this thing's still trading at 5.5 times earnings. You know, they, with this quarter, they now have more cash on their balance sheet than I want to say 2.5 years of profit. So I mean, they net cash. So there's so many things. Who wants an airline company, dude? If you're gonna sell me $100 bill for $15, I'll take as many of them as you got.
Hell yeah.
I don't care what industry it is, right? It's like Buffett says, there's no such thing as bad assets. There's just bad prices. I feel like we're living in a world that's completely forgotten that and thinks that the more highly priced something is the better investment. I mean, I, again, I still feel like a kid in a candy store. Now, if you get a nasty recession, will these things get hit? Well, yeah, but when you're buying them at these levels, right? When you're buying them with these types of balance sheets, you're not going to quit getting your dividend, right? And you know, how much is that stock going to get hit that's trading at 5.5 times earnings, you know, in South America? I don't think there's a lot more downside, quite
No,
honestly,
no.
even under the worst case scenarios. So meanwhile, you sit around and look at a stock like Palantir, and one announcement of a government bringing in another contractor to handle something, stock could be down 40, 50% on the session. And that could be leading to another 40% decline over the next 6 months. I just think everybody's looking in the wrong place. And if people are really confused and they're really nervous, it's probably because they're invested in the wrong stuff.
Amen, brother. Zach Abraham, Chief Investment Officer, Bulwark Capital. Tell everybody how to get a hold of you.
Yeah, man. So best way to get a hold of us, bulwarkcapitalmanagement.com. We do our daily show, the Daily Dots, try to keep it between 25, 35 minutes. You can get that at knowyourriskradio.com. We put it out every day. And the goal with that, Chad, you know, there's so much nonsense out there. We're like, okay, let's try to do a 25, 35-minute daily show where we give everybody the important financial and economic news of the day and any political news that impacts finance and economics. And so rather than having to sit through 2 hours, listen to guys like Kramer, you can get a condensed version from us with no BS. So that's kind of the story.
Love it, brother. You have yourself a good one. We'll do it again next week.
All right, pal. Good to see you.